So hello everybody, I'm gonna try and explain how I played my OPEX week. So, I've already drawn some levels from the last week. Many of you must remember this is the 54 to 56 demand area. Then we have 60 to 63, which was my line in sand for the Friday session. This very important demand area from 69 to 72, and obviously this area, which is the single prints area, which has been produced on the February dump, and I warned of this 2 weeks ago, and these levels were already in play the previous week, as you remember. We took profit on. I took profit on the Friday dump here around 65-63 because of the huge supportive level here, but also because I know that on a statistical bias, OPEX week is kind of rangy, so I wasn't expecting a continuation to the downside here, but I expected the price to stay in the previous week range, a little above or at least a little below, and this is what it's happened. Also, I thought that the consensus around the community was for a straight breach above 3,400, but in my opinion, it was too obvious, and in fact, it didn't happen. Anyway, on Monday, we opened above the 69 to 72 demand area, and once again, the odds were in favor for the bulls. This is why I wrote it on my plan, and I was still expecting, anyway, lacking of bullish momentum, and in fact, because of the OPEX week, the range to the upside has been just of lesser than 30 points. I want to explain how I played all this area at the beginning of the week, because it was kind of frustrating and I've been just scalping up and down, and this is the reason why I suggest people for this week to take profit as fast as they can, because in this kind of environment of rangy and choppy environment, there's a lot of tricks to trap people and lose money. So my suggestion was to take profit as fast as they can or stay flat, which is a position in the end. Anyway, the most interesting trade I took this week was this short here. I shorted around 96.5, if you remember, because this is 8 p.m. in Italy, and this is the previous candle at 4 p.m. in Italy. 8 p.m. in Italy, it's I think 2 p.m. on the United States time. Around 6 p.m. I wrote on my Twitter that I would have taken a short here if at 8 p.m. the bid was not above 97. A bid on this major time frame candle, 4-hour candle in this case, a bidding above 97 means to me that the bulls finally found acceptance above the single prints area. But this didn't happen, and the price opened around 96, and to me it was a good confirmation. Also watching the VIX and the Nasdaq was a good confirmation to take a short. And in fact, we had this good dumping with just 2 points on maximum adverse excursion. The price dumped hard down once again in this 69 to 72 demand level, which worked like a charm for the last weeks, as you can see. But I also warned on my Twitter that if the end of the day close was under 75, which is a level I calculated using a particular setup I have here on this window, but I can't reveal all my secrets for now. I told that a bid under that level on the end of the day close means to me more downside to come on the overnight session, and in fact this happened, and the price went down straight into 54-56 demand area. For the same thinking we did to short the market here, we must consider this major time frame candle here opening around 4 a.m. in my Italian time, and as you can see, the bid is just above my demand area. This is a good risk-reward trade to play on the long side. As you can see, the price did its trick down for 6-7 handles, and I would expect actually that the demand area down around 43-42 would have been traded, but this didn't happen, and we must consider that this open above the demand area, the bidding above this demand area, is a clear sign to go long. And the same happened here once again. On the 69.72 demand area, the price found some resistance as this area has turned to supply in this first instance, but then 4 hours candle open above that area means that the area is once again turned into demand, and in fact the price squeezed up once again in the higher range of the single prints area. In this case, a good idea is to take a short, because after such a good rally, straight rally into the supply area, you can't expect, especially in this kind of a choppy rangy context, the price to squeeze up once again. And in fact, as you can see, 97 served a good short. I was actually sleeping here, but when I woke up, I saw that the last major time frame candles was bidding under the supply area, and here around 82 I told myself it was a good idea to short, and into a few minutes, as you remember, the price dumped once again into a demand area. This is a higher high. Okay, so it's a good idea on this kind of environment to take profit, as I warned on my Twitter. So this is how I play usually, and I just watch dissonances between indexes, as I wrote several times on my Twitter, but I always monitor levels of price and their timing. Okay, I think that time is a very important thing on the market. Many people just play the price, but I always look to set up for times as well, and this is several examples of really good trades you can take just being patient and with a very maximum adverse excursion. Some people ask me how I play my stops, and this is a very easy example to do. In this case, if I shorted here around 96, but on the next major time frame candle open, the bidding was above 97, I would have stopped myself for 1 point. This is how I use my stops, and I don't use a proper size to stop. I mean, I don't have a 5 to 10 to 15 stops. I just monitor step by step how the price develops, and usually this way I'm able to go out from my trade if the price runs against me and the context changes. This is how I play. Sizing, I used to play big size on the scalps, lesser size for this intraday move, and when I swing, as I explained on my Twitter, I go sizing little by little on my position. Anyway, what I suggest everybody, and that's also my operativity, the intraday operativity, in my opinion, is the most consistent one. And as you can see, you can have incredible setups in price and time to gain a great risk reward on your side. I don't know what more I can tell about this week, actually, and we'll see what will be the open on Monday. If we open with a gap up above the single prints area, or if the price will be once again rejected. Actually, I don't know, and as you know, I don't do provisions about the market. Anyway, I would just like to thank for your support and hope you'll join my educational service I will start in September or October, where I will explain in a most detailed way the way I discover my levels, the setup in times, and the dissonances between indexes, and all of my method for trading this market. Hope you enjoyed this video, and we'll talk again on Monday. I wish you all a great weekend. Thanks again for all.